Gold and silver both have seen a good drop yesterday while getting a strong support at 1760, which is a long-term support for gold, and for silver it's 1900, both getting the support there and trying to bounce back or retrace back a bit on the upside. Now what is going to happen today, which trading strategy we should adopt in order to profit, we will try to see with the help of candlestick charts and indicators. Do not forget to like, share, subscribe and comment. Do not forget to watch till the end. First we'll look into gold, followed with silver, and yes, do press the bell icon and stay tuned with the latest updates. Let's start the day with gold. Gold right now trading at 1770 levels, and if you look at the hourly chart, see, if you think that there are too many indicators on the charts, do ignore this and just listen to the commentary itself. See, it is trying to consolidate here and trying to retrace back a bit. How far it can go? It can come back till towards 1780-85 zone. This is going to be a very strong resistance, and the next resistance is going to be at 1791. I'll be watchful of this. It can try to retrace back here, and yes, a good long entry at 1774 can be taken. One can stay long above this. Directional movement is bearish. Stochastic is overbought. It is trying to drop. See, with little divergence and little rise, it has got the stochastic on the hourly charts as overbought, but it can try to still rise a bit. See, the MACD is trying to converge and cross over on the hourly charts. RSI is oversold, trying to bounce back, trying to come out of these levels. Similarly on the 2-hour charts, you can see this is the fall there, and then it is consolidating since then. The support there at 1760 levels is very, very strong. It is falling shy of this, trying to rise. The candle size is increasing in nature. Probably the next candle can be further big, and it can try to come back till towards 1780-85 levels. That is my expectation. With the stop loss at 1765, one can stay long, but I'll give you the conclusion. Wait a little. Directional movement is bearish, trying to converge. Stochastic oversold, trying to come out. MACD is trying to converge. RSI is oversold, and hence we can expect that it can try to rise a bit. Look at the 3-hour chart. Similarly on the 3-hour charts, here is the support, here is the reversal. It is trying to rise with that as support. Probably the third can be further bigger in size, and it can try to go back till there. Then 1791, the next resistance 1800, definitely the stronger resistance. Now see, I told you below 1800 gold is going to see a good fall, and if you recall my 5 weeks back analysis, I told you gold is looking forward to 1680 and 1500 levels soon. First target may get achieved, so stay avoid a long-term position on gold there. And yes, for silver too, accordingly 1800 was the call. Now look at the here on the 3-hour charts. Probably it is trying to look forward. The third candle I'll be watchful of. At the same time, one must not forget that if it breaks below 1765, if you see it trading below 1765, you have to go short for 1760, and below that we may see a good fall again, and it will resume the bearish run. Directional movement is bearish here. It may try to converge a bit. RSI, stochastic is oversold. RSI, MACD is also, it is wide divergent and bearish, and RSI is oversold here too. Similarly, if you look at the 4-hour charts, on the 4-hour charts you will find, see, it is trying to reverse from here. How far it can go? It can again try to come back till towards 1780-82 zone, and then 1791, 1800. 1800 is definitely going to give it a very strong resistance, and any move beyond 1815 is going to be considered as a bullish reversal. Directional movement is bearish. It is wide and divergent. Stochastic is oversold. MACD is wide, divergent and bearish here. It may try to converge a bit. RSI is oversold, and hence a bounce back can be expected. Similarly, if you look at the daily charts, on the daily charts you will observe that it is trying to bounce back a little, but one must not forget that it is almost got the flat bottom there. And yes, any drop below this zone at 1768, and rather I'll say 1765, is a good entry to go short, and probably below that one can expect a bigger fall. And if you look at the directional movement is bearish, the stochastic is looking downwards, the MACD is wide, divergent and bearish, and the RSI is oversold. So in some, gold is trying to reverse back a bit, but remember, after this fall, after this consolidation, this is the first red candle, sharp red candle, hence a little retracement on the upside till towards 1780 can be expected. From there again, creating the big wick out there, because this is a bigger red candle, it can try to retrace back a bit on the upside till towards 1780-82 zone, and then again it can be followed with a good sharp red candle. Why I am saying so? This is a bigger red candle, and it must try to form a series of red candles. That is my expectation, that it can try to form. Because why? Because this is the first bigger red candle after this, and hence one can expect steps of or series of red candles can be formed, and hence below 1765 one can remain short today and one can expect a bigger fall. Directional movement bearish, we have seen the indicators. So yes, in some long entry can be taken at 1774, then one can expect 1780 levels as the first target, and beyond that we can expect 1785 1790 levels. But remember, see, I am still bearish on gold and we can further expect it to drop till towards 1740 levels in this week itself, and hence be cautious. One can go short below 1765 and expect it to drop. So yes, you can take a short entry at 1765, else till the time it is below 1800 I will not expect it to I'll not consider that as a bullish reversal, but any move beyond 1800 and then specifically 1815 you can consider that as a bullish reversal for the week. Then 1820 will come into picture, which is going to be a strong resistance zone. So be watchful of this. Go long at 1774, go short at 1765. Above 1774 the target is 1780, 1784, then 1791, and it is going to hit 1800 levels after that. But remember, do trade with a trailing stop loss, because I will still expect it to drop again and later today. So probably you have to be very cautious and always book the profits whatever you have. So either put a trailing stop loss or either trade with stop loss at cost, specifically with the long entries. At the same time, one can go short at 1765, then one can expect 1760 as the first support, 1753 as the next target, and then it will try to go back till towards 1745 and 1740 levels, which is the next support. Take your trades accordingly. Now let's have a look at silver. Silver on the hourly charts getting the support at around 1910 levels, and it is trying to rise from there, getting the support, trying to reverse back a bit. There is a stronger resistance at around 1933 levels. Beyond 1933 we can expect it to hit 1945 and 1950 levels. These two levels are going to be stronger resistance for silver. Beyond that we may see a good rise. Directional movement bearish, trying to converge, stochastic near to overbought, MACD trying to converge crossover, RSI near to sell levels, oversold levels rather. And if you look at the 2-hour charts, it has seen a retracement. It is trying to look back again on the downside. The break below 1910 is going to bring more fall, and we can expect it to drop till towards 1880 and then 1840 levels. We have to be watchful there. Directional movement is still bearish. Stochastic looking upwards, MACD trying to converge, and RSI oversold there. Similarly, if you look at the 3-hour charts, on the 3-hour charts, this is a greener, and with the support at 1910 it is trying to reverse back a bit, it is trying to retrace back a bit, and any move beyond 1935 is a good level to go long again. Probably you can stay long there and you can expect it to hit 1950 levels. From there again we may see a drop there, so be watchful of 1950 and 1960 levels. Directional movement is bearish, trying to converge. Stochastic is oversold. MACD is also bearish here, but it is trying to converge on the 3-hour charts. RSI is oversold too, and hence a bounce back can be expected. If you look at the 4-hour charts, on the 4-hour charts too, this is the retracement there. It is trying to reverse from here. The support there at 1918 is strong. You can go short below 1918 rather, I will say, and you can expect it to come back to 1910, which is going to give it a stronger support. Below that we may see a fall, else it can, with the support at 1918 you can stay long rather, and then one can expect 1940 1950 levels. See, this is a retracement which it is trying to do, and hence only reversal is only be considered once it is above 2000 levels, else it can try to retrace and then further followed with a drop. Directional movement is still bearish. Stochastic is oversold. MACD is wide divergent and bearish. It is just crossed over. This is the 4th red candle, and if you can see RSI, this is also oversold. Similarly, if you look at the daily charts, on the daily charts you will see after this support it tried to rise and then a sharper fall. So similarly, what we have observed on the 4-hour charts, that it is trying to retrace back a bit and then the fall can be followed. Similarly here also we can expect that it can continue or it can resume this bearish move. The support there at around 1880 is going to be strong. One can go short below 1918 and one can expect it to drop for 1910, 1900 and 1880. Be watchful of 1880 levels. Plus minus 5 can be always be a tolerance. And yes, one can expect if it drops below 1910, one can one can expect that the fall will resume till towards 1880 and below levels. The candle size, this is the first red candle after this minor retracement, and hence couple of red candles can be followed. Almost half the size can be the target, and hence one can expect 1880, 1860 levels on the cards if it continues to drop. On the upside, one can stay long rather till the time it is above 1918, and one can expect it to retrace till towards 1935 first target, 1945 and 1950. Watch out for these three levels. If 1950 is taken, one can further expect little more bullishness till towards 1960 and then beyond 1980 2000 levels. Be watchful. One can stay long with the stop loss at 1918 and one can continue to remain long. But below 1918, I will expect more bearishness. One can expect the fall to continue, and then 1910, 1900 and 1880 levels can be expected. So take your trades accordingly. Go long. Above 1918 one can stay long, and below 1980 one can stay short. Take your trades accordingly and take your positions accordingly. Remember, on the upside it may try to retrace back a bit, but 1950, 1960 levels should provide a very strong resistance. So take your trades accordingly, take your positions accordingly, and do trade with a trailing stop loss. Do trade with a stop loss which should be shifted to cost once you see your trade is in profit. Trade accordingly, trade profitably. Reach out to me for any of your trading or training related queries. My next batch is starting next week. You can be part of this. Reach out to me for more details. My email ID and Telegram IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading day. Thank you.